The Outlet Mall Fund has just had its third closing. It's a fund we set up 4 years ago with ourselves as the fund managers and our joint venture partner MacArthur Glen, who operate the malls and manage the underlying tenants. We've raised 250 million on this close. The current fund size is around 850 million euros. We expect that to grow to over 1.5 billion over the next 18 to 24 months. And we'll do that predominantly by working on extensions in the existing schemes, because what we do have is very dominant assets, particularly in the Italian market, and we're looking at new acquisitions where we can use MacArthur Glen's expertise and our fund management experience to turn assets around effectively. I think from an overall European perspective, our forecasts, and Henderson is very big on its research, looks in terms of looking at the overall market, UK looks the most attractive over the next 5 years because of the valuation reductions we've seen over the last 6 to 9 months. We still think there are opportunities in core Western European markets, but you've got to look a lot harder to find it, and you've got to be prepared to do more interesting things to properties, i.e. refurbishment, reposition. The markets we're particularly active in at the moment are Italy, Germany, both on the retail side, and we're getting ready to look seriously at investing a lot of money in the UK over the coming year. Henderson, we do 5-year forecasts, and the front end of those forecasts, the next 2 years, are not going to be too pretty in terms of returns. So we very much see slow growth over the next 2 years, not great returns, but then towards the back end of the period, as the market picks up, we see those returns increasing considerably. So we think over the next 2 years there'll be a good opportunity to buy fair value or even good value stock in the UK. As a house, Henderson has always been in favour of delivering a lot of its performance through income return, and for the last 2 years, particularly in the UK, there hasn't been any income return. There's been what we call negative leverage. In the next 2 years, we'll be able to get back to a scenario where most of your return is delivered through your income.